Hello. Welcome to our next chapter, that is IND AS 40, which talks about investment property. Very small IND AS. Nothing should barely take 3 minutes. Okay. So first understand what is an investment property. So investment property is, as the name suggests, investment property. This property is held for investment. So property held to either earn rentals, that means by letting out the property, or capital appreciation, that means just holding the property and hoping that the value increases, or both. Now, this includes only your land and building. What does this mean? That this will not include machinery. It only includes your land and building in investment property. Second, does not cover what? Assets for own use. If you purchase any property, plant, equipment which you are using, of course, that will not be included. Any asset held for sale or asset used by employees, all these assets will not come under Ind AS 40, that is your investment property. Next, when will you recognize? Recognize as an asset. Recognize as an asset only and only if expected future benefits you are expected to receive. You are expecting to receive future economic benefits and whose cost can be measured reliably. Even expected future economic benefits and whose cost can be measured reliably. Very important part. This is always measured at cost. That means your fair value option is not available. It is always measured at cost. And since it is measured at cost, revaluation is also not allowed. Never. Investment property is always at cost. If there is any property with more than one use, in such a case, if the property is held partly for capital appreciation and rental and partly for use, that means, say for example, you have one building of 3 floors. Out of this, one floor you are using, and the rest two you are using for capital appreciation and for rental. That means one is for rental and one floor is for uh, own use. In such a case, sir, how do I treat this building? So if the property is held partly for capital appreciation, in our case, 2 floors are for capital appreciation slash rental and one is partly for use. So if the both parts cannot be accounted separately, if it is impossible to account both of these separately, that is your second part. If it cannot be separated, then account it as an investment property on owner occupied property, whichever is significant. So in our case, since two of the floors are being used for rental, in such a case you will account it as a investment property because the rent portion is more significant. The capital appreciation part, that is majority of the property, is being used for capital appreciation. So in such a case it will be treated as an investment property. However, if both the parts can be separated and accounted separately, that means it is possible to separate these. It is possible to identify what amount will be the each floor. In such a case, you will account it separately. That means this floor will be accounted as own use, and only this part will come under Ind AS 40. Great. And with this, we are done with the Ind AS very small chapter. And I will see you in the next one.